Hello, my name is Martin Boer, a Director of Regulatory Affairs at the IF. It'll be my pleasure to moderate this panel and to steer the conversation among these great speakers who will review how the COVID-19 health and now economic crisis is impacting and fundamentally reshaping European policy priorities. Although they need no introduction, please allow me to introduce to you Sylvie Goulard, who is Deputy Governor at the Banque de France and a former member of the European Parliament. We have Alejandra Kindelen, who is Senior Vice President for Communications, Group Marketing and Research Division at Santander. And of course, Mario Nava, who is Director for Horizontal Policies in DG FISMA at the European Commission. We're going to talk today about the implications for the integration of EU financial markets. Last year in December, the European Commission released its new 5-year political cycle of priorities, including to preserve and improve financial stability, to protect savers and investors, and to ensure the flow of capital where it is needed. There was also a lot of fresh energy just 6 months ago on moving forward on aspects of European Banking Union and Capital Markets Union. But then COVID-19 happened. And the EU, like every other organization around the world, has had to refocus its priorities. And the brewing crisis has also rekindled, if you will, old discussions about risk sharing across the continent. Just today, this morning, the Commission released a revised work program meant to propel Europe's recovery and resilience. And we've seen examples in that of, for example, Capital Markets Union, green finance, and financial reporting being pushed back, if only by a few months. So the reprioritization has been happening. Mario, if I can please start with you, representing the Commission, can you please provide us with an update of how the EU priorities and the work plan have been impacted by the pandemic, especially in the area of financial markets?
Thank you very much. And I'm really pleased to be here with you and to follow on the steps of good friends like David O'Sullivan and Paulina Deschmek. I think your question is fit. I wouldn't, however, read as the fact that there has been a pushback or anything of that kind. Actually, quite on the contrary. What has happened is that the pandemic, and in particular COVID-19, has shifted attention to the short-term emergency measures, which are needed to support the economy. But this has not detracted any attention whatsoever from the what I think you called the fresh initiatives that have been put before. The fresh initiatives, in particular, were the Green Deal. And again, you mentioned the Commission Work Programme, and I'm very happy that you have such a good reading. The first sentence of the Green Deal in the Commission Work Programme, written in December, as you say, so pre-COVID, says the biggest challenge and responsibility is to keep our planet and our people healthy. So we had very clear in mind that this was one of the issues, and this is one of the issues. So what has happened is very clear. Lots of attention now in exiting from the emergency where we are, but no moving away, no detraction, no pushback, no delay on the big priorities, green and digital, and then completion of Banking Union and Capital Markets Union. And I'm sure we'll come back to that in a moment.
Great, thank you. Sylvie, the sheer magnitude of the current crisis has required a combination of both EU-wide approaches and responses, but also by member states. And so can you tell me a bit about how you view the actions taken by the EU so far and what actions France has taken, and then how you see the financial services sector playing a role between those two?
Well, thank you, Martin, and thank you for the invitation. It's what you need in such a crisis is a combination of measures. You have the monetary measures, the prudential measures, and the fiscal ones. On the monetary side, we have one single central bank, which is the ECB. And as you all know, the ECB has reacted very promptly and adopted a 750 billion euro specific emergency purchase program, which is contributing to the stabilization of the markets. On the prudential side, we also have, and this was the result of the work done after the great financial crisis. We improved the structures in Europe, and to put it simple, we have now for the main banks a single supervisor, and there, under the umbrella of the single supervisors and the authority for banking, we have done everything we could do to release the buffers, for example, the contracyclical buffers, and this was appropriate and it is working. And then, as you said, there are measures at the national level and at the European level. In France, we have already adopted an investment plan of 110 billion euros in April. And part of it is dedicated to an unemployment scheme to compensate the lack of work. And also some resources, 300 billion of state loan guarantees are made available for the companies. But of course, this could not work without a very strong action coming from the European level, because we have a single market, which is one of our main cards to play in the recovery. So we welcome very much the decisions taken today by the European Commission that are coming after certain decisions on unemployment and first emergency measures. So the most important thing to keep in mind is that, in my opinion, for the first time, we have used the tools we created in the past and tried to coordinate better, in respect of the full independence of all institutions, what is done by the monetary and supervisory side and what is done by the member states. But as Mario said, and I hope we can come back, this should not mean that we give up on the structural changes.
Right.
On digitalization, we had a big stress test, if I may say so. We are doing today something we are not used to do in the magnitude we do these days, which is to have these virtual meetings, and it works. And it can have long-lasting implications for the organization of work and the real digitalization of economy. It's happening already. On greening, we have to be very careful because in the Banque de France, we have invested a lot on financial stability and climate change, and we are really convinced. We have produced a piece called The Green Swan with the BIS, in which we try to identify the risks linked with events like climate events that are completely unprecedented. So we don't have the data, we don't know how. And if you compare with COVID, you realize that the sources are quite the same. We have not taken into account the externalities, the negative externalities to the natural environment, and also the way it happened in a very symmetric and violent way on our economies. So I hope we can come back to that. I'm not saying that everything is fine by far, but at least the different pieces of the puzzle are in place, and we will see how they can have positive effects for the economy.
Mm-hmm. And since you mentioned remote working, Sylvie, how do you see that possibly positively impacting the green agenda?
Well, I think it's a wake-up call, this COVID. It makes all of us humble. There are events we cannot control. Globalization has made us interdependent more than ever before. And climate, to a certain extent, is something that could hit us in the same way. And on climate, we know already with all the studies that it is going to happen, that the emissions have increased, that the stock of emissions is very high. So we have to hurry up on that.
Yeah, great.
And on climate, there is no vaccine. While there may be one on COVID, but not sure we'll find any on climate.
Right. Thank you. Staying on the COVID topic, I wanted to turn to Alejandra, and I think you have your microphone on mute, Alejandra. I want to turn to Alejandra. Santander is obviously the largest bank in the EU, and you have significant operations all around the world. So you've been fighting this crisis all over the place where you operate. How has your firm responded to the crisis, and how have you been working with authorities, both on the health side and on the economic side, to help?
Thank you, Martin. I think indeed COVID is a huge challenge, a big stress test. We were used to stress tests, in the banking sector for a few years now, but this is the real one, operationally, financially, in all sorts of senses. But I think we have to be proud as a sector, Indeed, in Santander, we have been able to keep working without disruptions. We have kept 70% of our branches open, 112,000 employees working from home. So that also thanks to the good networks and the digital investments that we've all made in the past few years. That's been very important. And the second observation, of course, is the important role that the banking sector has as a core part of the solution to the problems caused by COVID. COVID is not a financial crisis, but it does generate some stress in our economies and a lot of stress in our economies. And I think the banking sector is prepared to help. And we've seen already this morning and yesterday the ECB and the EBA publishing a very good reports pointing at the starting point that the banks have and also the challenges. But going to the specific question, we have been, of course, working very close to our customers, providing liquidity, ensuring that liquidity issues do not cause solvency problems, or at least trying to prevent that from happening. We have taken a huge, payment holidays, of course, serving our customers with all these credit with guarantees, all the lines that were provided by the governments. We have to make them operational. So I think here we have done a lot of work. A couple of thoughts on that in the response to COVID. I think all these lines, all these supports that the governments have put and the authorities in general, also the central banks, of course, have put on our table. All these, what we learn is they have to be fast. We cannot rescue companies once they have gone under. So this has to be put up front, and we thank and we welcome the quick reaction by authorities this time. It has to be big. It has to be big enough to be able to, serve the problem with the right cost. It has to be simple. Initially, some of these lines were operationally a bit complicated. We were able to speak with, as an industry, with the authorities, and shorten the time to market of some of these products. We've seen it in the UK. The C-bills became V-bills. In Germany also we have the quick loans. So I think that again, the quick adaptation of these lines in coordination with the industry has been quite good. I have here also they have to be fair, inclusive. They have to cover all sorts of programs and companies, not only small ones or big ones, but and this has been the case. And they have to be eligible. And the idea, and Sylvie, you can probably speak to that much better, but making these loans eligible for liquidity processes is very important for the banking industry. And I think we've managed, again, working with the authorities to make that possible. So our concern now on a macro scale is that there are some differences among countries in the magnitude of the support systems and in the percentage of guarantees and so on. And well, these differences, also mean different degrees of protection to the real economy, and therefore different degrees of exposure to the financial sectors. And this is what we are a bit concerned about. But of course, following very closely the package announced today by the European Commission, which I think is key to ensure that these differences are sort of somehow, limited.
Great, thank you. Sylvie, you mentioned earlier, of course, what France is doing, but we're also seeing that this pandemic is bringing member states closer together. So, for example, the French-German proposal on the EU Recovery Fund comes to mind. And I was wondering, sort of a more broader question, how is risk sharing necessary, especially between sovereign states, to foster really a sustainable recovery across Europe?
Well, we took the decision to share risk when we created the European community, because we have a budget and we have common policies and we have a single court of justice. And all this is already a decision we took decades ago. We should not go too far. I mean, it's also good that we insist on the responsibility of all actors. We have to create equal opportunities, and that's the reason why the Commission has a role to play as the ECB to act for the EU as a whole, to put all companies and citizens in the same situation, even if they are not living in the same states. But this is how can I say, an added value in terms of opportunity for all of us. So I would not say that the goal is to share risk in the sense that it could erase the responsibility. This is not at all the common goal. The common goal is to increase the opportunities for all of us. And sometimes when you share money, you also invest in the future because your neighbors are also your clients or possible future staff or whatever. And that's the way the single market should function. We should not underestimate the fact that the member states don't have the same means. And that's the reason why the competition policy has always been at the heart of the European integration and should stay. Maybe without any kind of triumph. I think today is a big day for Europe because what the European Commission has proposed is balanced. It's that the budget we have could be used in this emergency situation to help the ones who need it the most. But at the same time, I perfectly understand the countries in the northern part of Europe who are asking for some guarantees. And I'm sure that Mario, who, by the way, is going to have new responsibilities and play a role in this, can give us some thoughts about that. Because, you know, conditionality is not bad. Conditionality is also the way you can make sure that the system you put in place of transfer and loans is sustainable and that you create trust instead of creating mistrust.
So Mario, how do you see the sort of the resource sharing versus the risk sharing question here?
Well, I think I never like to be very honest, the risk sharing versus risk reduction issue. But I think there are I want to take 2 points which are very important. One is the one that Sylvie has put forward. Today is a rather important day for Europe. Back in 2002, there was a report known as the Sapir report, which had a line that became famous, and the line was at that time in 2002, the EU budget is an historical relic because it was looking at the past. Since then, we have made lots of progresses. And a month ago, the heads of state and government have agreed to the fact that the mothership of recovery will be the EU budget. The reason is exactly what I think you, Martin, was saying, that the EU budget is tested and trusted instruments that we have been using for many, many years now with satisfaction, which it's used to purposes. And this is exactly the point that Sylvie was highlighting. So, once the heads of state and government have agreed that the mothership of the recovery will be the EU budget, then the Commission today has come to that. It's important to understand that the Commission has come to that both to facilitate private initiatives, so in a way to leverage on the possibility that the EU budget gives, for example, in terms of guarantees, in terms of helps to the SMEs, in terms of what Sylvie mentioned, the reinsurance system for unemployment. So there are a number of areas around which it can do. What I think today really makes the point is that the EU budget has been integrated into the EU policy making. And now you have in the proposals, and then of course we will have the democratic debate in Council and Parliament as it is foreseen by the rules. But what happens is that we are having now in front of us a true instrument of economic policy. And after a crisis like this one, you could not hope for anything else. And I really want to insist on the fact that this has been done steadily, progressively, but very fast. I mean, COVID exploded 2.5 months ago, 11, 12 weeks ago, more or less, with a decalage of 1 week from one to the other country. And in few weeks in Europe, we have taken decisions which probably were not taken for the previous years. So we moved at a speed of weeks instead than a speed of year. Now the calendar itself was for the proposal of a 7-year plan. And that's, I think, is what we have done. But let me insist on this point, which I think is also represented by your conference of today, is the public and private public and private cooperation that may help a lot. Public money at some point becomes finite. Leveraging on public money through private capital, which is something that we started with the Juncker plan 6 years ago, which has now become InvestEU, which has now become many other initiatives. I think this is the way to go. We have seen very much with the Juncker plan that the reason why this works is because in the world where we are, where returns are low and so on and on, it's just enough to marginally tilt the risk-return equation of the investment through to the public part, that this allows to the machine to restart. And I think Alejandra said a great truth. You cannot rescue someone if it is dead. So for as simple and banal it seems, but I think this is what we need to keep in mind. In order to rescue someone, you need to make sure that he is still alive. And in order to make sure he's still alive, you need to intervene relatively fast. And I think this is what we have done today.
Yeah. And we also saw earlier in the period that the Stability and Growth Pact was also loosened, somewhat to allow for more public investment, but, also more private investment, in Europe. So you're using these tools also to stimulate the private investment, as you say.
There is no doubt. I mean, the let's say public-private partnership in investment is what turned the dynamics of European economy in the last 5 years. I mean, it was the pushing of the Juncker plan in 2014, 2015, and then Europe came out of the crisis thanks to greater investment, the largest part of which private, about 15 times private and public. And this is the same here. I mean, if you look our spring forecast, which were issued around the 7th or the 8th of May, we see a rebound next year, a rebound which is investment-based. And to have an investment-based rebound, you really need both the public and the private to intervene. Of course, in different proportion. I mean, private investment can be much, much larger than public investment, but it's the complementarity of the two that matters.
Yeah, great. Alejandra, I wanted to turn to you and ask about banking union. Obviously, late last year, there were a lot of ideas coming out about what can be done, and obviously, already a lot has been done with banking union. And the cup is definitely more than half full, as Andrea said this morning. But there are still questions about completing the third pillar, the European Deposit Insurance Scheme, and about a backstop to the Single Resolution Fund. So I want to ask you, since you're active across many member states, how important really is that for you as a bank? And what can it do to have those in place to help with any possible fragmentation or even ring fencing within the EU?
Thank you, Martin. And I did hear Andrea this morning support the progress made, and I totally agree. We have to look at the glass half full. We can just think about where we were in the previous crisis. At this stage, we had none of the instruments that we have today, and the reaction has been quick and good. So I think that we need to be very, happy that we have what we have today. But I do also think, or we believe in Santander, that completing the banking union is really key, and breaking the sovereign bank link really should be a priority for us. It's true that the ECB is doing a great job today containing spreads, but it's also true that I think in the years to come, the different fiscal position I was referring to before also could increase fragmentation. So it really would be great to have EDIS today. It would be great to have a single deposit insurance fund today, because we do believe that is critical to avoid fragmentation if we do get these bank sovereign tensions in the future. But it's also true that I cannot be very optimistic on renewed political commitment around this issue. It's not an easy issue, and it won't be when we are seeing, our balance sheets growing again and NPLs growing, unfortunately, which is, I think, what we're going to see in the next few years, inevitably. So it's not going to be an easy conversation to have. So where should we go then is to sort of, try to move in what we believe is feasible, and I think that that we certainly need to move towards harmonizing insolvency laws. That is critical as a critical step to be able to eventually arrive at an EDIS, no? And also having and closing finally the backstop to the Single Resolution Fund. It's true that there was a lot of progress made there. Those conversations went quite far, but I think we need to sort of close that chapter to ensure that at least we have that instrument, no, in place. For us, EDIS is very important because it gives the same degree of guarantee to deposits and depositor confidence throughout the member states. But it's also critical, in our view, for capital markets union. I mean, unless you make deposits fungible, it's very difficult to see, a common integrated savings pool in Europe that can serve as the basis for a capital markets union. So we do think that is a critical step that we need to look forward to.
Yeah. No, capital markets union is a very good topic as well. Mario, I wanted to ask you, obviously, the ambition of a CMU is to maintain the role of the EU as one of the top financial centers in the world. And given that CMU is a priority, we heard today that there's going to be more work done in the fourth quarter on that. How do you see the EU legislative efforts progressing on that, and what further measures are most important, do you think, for it to succeed?
Yeah. Look, as you know, we are running a high-level forum on Capital Markets Union, which will deliver its result very soon, in a matter of days. Around the 10th of June, we will have the final meeting next week. When COVID exploded, we had a moment of discussion among the group members whether, because of COVID, these would become more or less urgent. It became evident to everybody that because of COVID, this has become much more urgent. The reason is very clear, is that if you have a well-functioning capital markets, they offer an alternative policy tools to stabilize the economy. We have seen it also in COVID. Much of our measures have passed through the banks, exactly because of what Alejandra has just finished to say. The banks today are infinitely better than where they were 10 years ago. So today they can obviously be part of the solution. On average, banks today are twice as capitalized as what their capital requirements is. So they could really participate to that. But that was one policy tool. Lacking well-functioning integrated European capital markets, we could not use a second policy tool, which of course would have offered a greater ability to absorb shock, essentially. So the judgment of the group was very simple, was that yes, we needed to pursue and possibly, if anything, just to accelerate. In which areas should we focus? The group is focusing in three areas. Area number one is the one where Europe for many years has been lagging behind, which is retail participation to financial markets. I think that is really an area where we all concur that we need to do more. It's obviously a moment where I think, given the investment that we have in front of us and given the loss that we have already absorbed, it's a moment where it's good to look at the future. Then there is the area of integration of European financial market, an area which again goes back to the early 2000s, the Giovannini reports, 2001, 2003, on integration of financial market. And then there is the big area of access to finance. As I said, the group will come out very soon with the recommendation. It's not my role to preempt or to jinx their recommendation, so I will not do that. You have all seen the preliminary report, which goes exactly in that direction. But at the point, I think that we want to push is that if you have two policy tools, so if in addition of having safe and sound banks, as we have had, as Andrea and Ria argued this morning, you also have capital markets. They reinforce one another. They because, for example, the issue of the NPLs that Alejandra just mentioned, and many other areas where capital markets can ease the if you want the service that banks will have to make for the economy in the future. So for us, this has been very clear. Today we said Q4 will be for the CMU. It's likely to be an early Q4, so that's pretty good. As I said, the high-level forum will deliver in few days, and then there will be a webinar, as we do these days, with my Director General and with the Sean Berrigan and with the chair of the high-level forum, Thomas Wieser, and they will present this. Then a debate will start, obviously, and we hope to put all this together by the end of September, beginning of October. Thank you.
Great, thank you. On the market coordination point, Alejandra, when you look across the single markets, there are obviously differences on tax and legal, and some of these are also member state competencies, of course. But when you look at the differences there, and maybe also with insolvency or with regulation, are there obstacles that you see from a private sector perspective that make it difficult for capital market union? And which ones of those would you see as most important?
Thank you, Martin. Well, for us, when I think of Capital Markets Union, there's like three magic words in my mind. No, the first one is EDIS, I already mentioned, and the fungibility of deposits and so on. For us, I think it's key. And when I talk with our CFO and the financial teams, they always mention that as a key one for CMU. The second one is securitization. I think that it's key, that we are able to make securitization work in Europe. And I know that there's been work, and we're all putting a lot of energy behind this in different working groups with the industry and with the authorities, and we designed this, quality label, the STS and so on. But we are not able to have securitization work and that's really key to move from bank-based funding to market-based funding. It will help diversify risk, deleverage bulky balance sheets that we will have post-COVID. So I think focusing on making securitization work is key, and we probably need to work at different levels. There were some also operational issues with our supervisor at some point, the due diligence that they have to make, the information, the access to information. There's a lot of issues here that we need, I think, to revisit and ensure that this works. And the third magic word for me is data, no? And I think you mentioned, Mario, or I know that the high-level group in the Commission has also talked a lot about data, and this is important. In the end, having information about the SME risk is key for risk profiles. If you don't have that, accessible, enough information, enough data, it's not and data that you can share. And by the way, it's not always financial data. Also in the post-COVID, more digitalized world, we probably need to think about more data sharing cross sectors and having the possibility of analyzing information from public utilities or from not just financial data that can give us a good risk assessment of customers or SMEs throughout, to ensure that securitization and CMU works. So those are two areas I would concentrate a lot of energy on: securitization and data. By the way, both of them are on the table of the Commission, and we are actually filing a response to a consultation on open data today or tomorrow. So I'm glad that those things are definitely on the table.
Great, thank you. Sylvie, I wanted to bring into the discussion Brexit, which is often a delicate topic, obviously, but it is set to occur over the next couple months and of the year. And when I hear things like the need for more securitization that Alejandra talks about, you do need sort of deep and rich and liquid capital markets for that. And so I was wondering more generally, how do you see the points raised on EDIS securitization and data, and sort of what do you think needs to be done to create these rich capital markets outside of Capital Markets Union, as a concept? What do you think are really the more important aspects there?
Now, first of all, I want to underline what Alejandra just said on data, because data is very important for trust. because at the end, what is Capital Markets Union? Is that we have savings. We are aging societies. We have very high level of savings, and maybe after this crisis even more, because some people took some precautionary measures during these months. So we have the money. The question is where we can channel this money in order to increase investment in future-oriented fields. And for that, data are absolutely key. Of course, all the points made on the trust in deposits, etc., I don't want to come back. So Brexit is unfortunate. It was not the European choice. And the position of the European Union, as far as I know, and the position of all the central banks, because Capital Markets Union is also very important for the transmission of monetary policy, as the banking union is. The fact that we have now sound and resilient banks has helped us to take the measures we have taken to give them more liquidity than ever before. So this good cooperation, public-private, goes also through the capital markets, and through the banking sectors. And the position is, of course, to try to build the best possible relationship with the UK. Of course, it's not my role to say what we would wish, but it is well known since the beginning that we want to preserve the integrity of the single market. The fact that one country is leaving does not change the whole project. So we hope the Commission and the British government can find a common ground, respecting the single market, respecting the willingness to have some more room of maneuver at national level. But we should not fool ourselves. It's not an easy deal. So maybe we will have to live with equivalence. But once again, it was not our choice. It's something we will try to adapt. And from a central bank perspective, the most important thing is to keep the stability of the system. That's the reason why, for example, it's very important to look carefully at where your CCPs are located, where they can get the support from which central bank, under which conditions, etc. There are many possible choices, but in any case, the financial stability should be put first.
Yeah.
And then we will see where the business goes, and competition between several hubs might even be something positive. We consider in Europe that competition is good for productivity and innovation. So why not having, if we look at the way it functions now, maybe 4 or 5 main hubs, maybe specialized on some issues. So it's very difficult to say, because the situation with the COVID, it was not easy before. I don't want just to hide behind the pandemics, but it's even more complicated. We know that we only have 1 month now to decide if we have a delay or not. Obviously, the British government does not seem to want a delay. So in this case, we will have a system of equivalence in the hands of the European Commission, and we trust the Commission to do it in a fair and rigorous way.
Alejandra, are you also seeing opportunities for continental financial hubs, or is it really a lose-lose situation?
Thank you. Well, first of all, I have to say as a bank how much we regret Brexit. I mean, we're the top bank in the Eurozone and a leading bank in the UK too. And you know, we have UK colleagues and customers and so on. And this is really something that we regret, no? I also have to say that Brexit already started in a way 4 years ago, no, with a referendum, and banks, I think, started to get prepared for this, and we're almost there, and we haven't really seen much, you know, any disruption yet, really, and yet we have moved and we have, you know, already prepared for this scenario, no, which is something that I think is important to stress, no. Something that I would also stress is that, you know, we have not, I mean, London really continues to be a huge hub, you know, on capital markets, in capital markets for Europe, and it's competing also outside of Europe, no? And having said all of that, yes, I think that we certainly have to focus a lot on capital markets union and the opportunities that we might face in this situation. Indeed, you know, developing efficiency and capacities of the market is much more important than location. Location really nowadays is not the relevant thing. It's just developing those capacities, and I'm sure that we are able to do so. I would also argue that diversity is key for resiliency, and COVID has taught us a lot about that. And when we think of some numbers, 98% of cleared euro interest rate swaps in the London clearing house. I mean, I think there's definitely an opportunity, and it will be good for everyone to have some diversity and diversification to make the market more resilient. So I certainly do see opportunities there. I think it will not be immediate, but I think it's in the interest of everyone, possibly also including in the interest of the UK that we start to diversify market hubs in Europe. Absolutely, yes, and we're working for that. Great.
We're in our final minutes, and I wanted to bring Mario back into it. In your current role, you're obviously also responsible for the digital agenda and sustainable finance. And I was wondering, if you look at investment in those areas, it's also very important, obviously, to attract investment. How do you see the new work plan and the initiatives helping with that to make sure that there's financing?
Yeah. Okay. On sustainable finance, I need to make a graph, right? I think what Sylvie said was very, very clear. We have a green policy. Our sustainable finance policy starts with the concept of health. That's where we have been attacked pandemically. So that means in the whole world. It's very clear that in the moment that health attacked, prosperity is attacked, growth is attacked. And probably this is the result of several years of loss of biodiversity and a number of other areas. So reinforcing what we call mitigation, even before adaptation, reinforcing that, increasing the resilience, it's quite important. We did, as you know, last year in December, we managed to get an agreement on the taxonomy for sustainable investment, which concluded the action plan on sustainable investment. And we go back to what we were saying before, public and private investment. And we really count a lot on that. Now it is being rolled out. We will have this year 2 delegated acts on climate change mitigation and adaptation, and next year 4 delegated acts on the other 4 objectives. And what we see is that the companies already start to take that into account, which I believe is very important. And we all know finance is a network industry. There is a mass effect. So it's quite important that it gets traction, and I think it does get traction. Our narrative has been completely strong and solid. At the very beginning, when I was doing this seminar, at the very beginning of the pandemic, I had some headwind. The very first one I did, someone like you, a moderator, told me, well, now that there is COVID, you stop, please, with this nice thing about green and sustainable, because we have something bigger to solve. And I just pointed out that, the deadlines like 2030, 2050 were not invented by a few bureaucrats in Brussels, but they are the deadlines that are given to us by science and nature. We may decide to disregard them, and then COVID will seem to us a very small thing with respect to that. So I believe that is quite important. I see Sylvie wants to add something.
Now, I just wanted to add one word, is the word stranded assets. It's in the interest of the financial sector to look at the sustainability of their investment. If they ignore, in the short term, they can, as Mario said, consider it's just a matter for some bureaucrats and central banks. We have created a network, but we are now more than 60 banks and supervisors worldwide dealing with this issue, which is not an easy one. And we consider that the financial risk related to climate risk is real and irreversible.
And on digitalization, which was our second thing, I really don't think I need to spend any moment. Imagine what the world would be these days without the digital. We know digital finance for a few years. If I ask anybody for us when it was the last time we went to a bank, well, Alejandra goes for work to a bank, but to bank, none of us, I think, went in the last few years, and still we all enjoy banking service. But now, with what has happened, we are moving digital investment to many other areas, to health, to many, many other areas. So I think this has been an obvious demonstration of why to have digital capacity matters, not only for the growth of the economy, but also for the resilience of the economy.
Very good points. Alejandra, anything final you wanted to add?
No, I think we will come out of this crisis greener and more digitalized, for sure. Yeah. I think that the Commission's agenda here is very clear. I think as banks, we feel the pressure of what you were saying, you know, the stranded assets. They're not easy subjects, and you said so too, Sylvia. I mean, I run the macro research department, and we're trying to assess those risks, and it's not easy. We don't even have the tools or the people who...
The data.
My macroeconomists have not been thinking about this for decades, no? So yeah, you have to change their minds. I mean, we have to change our minds.
Sorry? Women. High new ones.
Yes, yes. I have quite a few actually. Our econometrist is there are two great women there. Absolutely, yes. We have a good balance there. Okay, so we will become more green, more digital. Absolutely, we have to focus more on coordination of health policies, develop fiscal tools in Europe for quick response to the crisis. I think, and certainly. And advancing in the European projects in the good times. It would be great to have, you know, EDIS for the next one and other kind of instruments. But I think we're doing quite well. We have quite a broad range of instruments on our table right now, and we have to be grateful for that.
Great. Well, thank you so much. Unfortunately, we're out of time now, so please join me, everyone, in thanking Sylvie and Mario and Alejandra for a very stimulating discussion. But this session now also concludes our IIF European Conference. So thank you for being with us. I hope you found all of our panels and discussions insightful. Thanks again also to all the speakers who gave us their time to share us with their perspectives. And then we wanted to ask you to please also fill out a short meeting survey that will be sent to you via email in the next 24 hours so we can hear your feedback and thoughts on the event. Please also continue to look at our IIF website for updates on our latest virtual offerings, and also plan to join us in October for our IIF annual membership meeting, which will be virtual this year. And until then, please stay well and stay safe. Thank you.